even though I am distinctly not thrilled about the setup here, can I just say that it does not make all that much sense for our stock market to be down as hard as it was today off of weakness in China, even as I've repeatedly said that China is a shadow of its former self. The Dow closed down 361 points, S&P lost 1.16%, Nasdaq tumbled 1.14%, and the primary culprit was not the bond market. Jeez, I heard that all day. It was some incredibly weak Chinese economic data overnight. Now, let me ask you, I'm not ignoring the ongoing collapse of gigantic corporations and trusts in China, but do we really believe China should be super important to our stock market these days? I've repeatedly advised, as we've raised cash, it's precisely because of days like today, maybe tomorrow, where the market gets hit on something with little relation to our economy, but is important, and there's no denying that. You can apply your cash lightly here, then buy more as we go lower to these themes, because the situations tend to last for more than a day or two, and the themes last for ages. So be prepared for pain. Just know that
the house of pain.
The pain can be a buying opportunity as long as you know what to buy and can buy slowly, in stages, on the way down, as we do for the trust, and tell you before we do, every day of the week.
There may be another downgrade coming for the banking industry. Fitch is warning it may be forced to cut the credit rating of dozens of banks, including big ones like J.P. Morgan. CNBC.com's Hugh Son was first to report the story. He joins us now, Hugh. So what's behind this potential move?
Hey, Mike. So I think just a little bit of context here. So Fitch, back in June, lowered its assessment of the U.S. banking industry's health from AA to AA minus. And there were no rating changes on the bank, so it went largely unnoticed. I think Fitch was actually kind of concerned at the increasing risk that they'd have to cut it another notch. So taking that industry rating from AA minus to A plus, which is one level lower. Now, the problem that introduces, Mike, is that you have four institutions, some of our top-rated credits, including J.P. Morgan and Bank of America, the two biggest banks in the country, that are rated currently AA minus. And you can't have banks rated higher than the operating environment in which they operate. So that would necessitate at least the examination of cutting them from AA minus to A plus. And that would potentially set off a cascade of examinations of the entire universe of banks covered by Fitch. There are more than 70, where you would have to consider cutting some of these other banks, that are rated less than J.P. Morgan and B of A to maintain the gap between the top banks and the lesser credits, Mike.
I suppose that this is still based on a lot of the issues that we have been aware of for months, which is, higher cost of deposits, some deposit flight, taking some unrealized losses on bonds, maybe some deterioration of the economy down the road. I guess the big question for me is, this will matter if it does raise the cost of borrowing for the institutions. Of course, debt and deposits are the raw material for what banks produce, right? So is there any evidence that might be the case?
Well, I think, you would have, obviously the markets are a dynamic thing. I mean, Moody's, cut 10 banks last week, and Morgan Stanley analysts basically pointed out they believe that the borrowing costs for the downgraded banks would increase, and there's even a risk that some of the banks could get locked out of debt markets overall. If you increase the cost of debt issuance, what does that do? That basically increases the pressure on their profit margins, and that's one of the big stories, of the year. I think it's important to point out two things. The reasons, the factors that would potentially push Fitch to do this would be, credit normalization. If commercial credit, obviously we're talking about office loans, if it's worse than they expect, if that normalization is actually worse than they expect, then they would have to look at that. And if the Fed actually has to keep rates higher for longer, then that's something that they would have to look at as a trigger for these potential downgrades.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel. Support this great content by hitting the Cash App and by joining the Patreon.
And guys, we got Jim Cramer blaming China for the stock market pulling back. And guys, we know all we have to do is look at the actual indicators. These yield rates are starting to take off. And guys, we know what? The bricks are knocking right at the door. And Jim Cramer is telling you the truth when he says prepare for the pain, because it's about to be a whole lot of pain in this fourth quarter. And we have Fitch again, guys, warns of downgrading banks. And guys, we know credit is tightening, so these small to medium banks have already been downgraded. They don't have to give the label. They can no longer have access to the credit that they had before. Remember, the Fed have high rates for longer, and that is destroying the United States economy. But we know that's all part of the plan. Destroy these banks because we know they can't survive in the new digital economy. Real-time settlement gets rid of this old banking model. And then, guys, we have China's central bank cutting rates. Remember, they have the ability to cut rates because they have a cushion. The United States is raising rates on the inflation that they actually caused, which is destroying the global economy because we know everybody's relying on the U.S. dollar, but we know the emerging markets, Saudi Arabia, the Middle East, and then also Israel have a plan for that. They're helping with the rise of the dragon. And we have the mainstream media talking about China's youth unemployment at 21%. Guys, if you take a look at the United States youth unemployment, you'll probably be looking at about 90%. Our kids don't even want to work. A lot of those kids start off at 7 and 8 years old in the emerging markets. But of course, the mainstream media is not going to show you that because they wouldn't be able to get away with the things that they actually do. Especially in Africa, you have little teeny kids digging for commodities. And remember, the crypto teacher told you. And now, guys, we have the AI deep fakes and commercials. And we know this technology is coming, guys. They want to have it so you don't know what's real and what's not real. And it's all a setup for the metaverse. And what is it a threat to? That's right, the national security. We know how they use that all the time. And we have Warren Buffett investing in real estate. And what does a crypto teach you? To follow the money. And guys, we know he's big and Occidental. And we know how important energy is going to be. The Rockefellers, Exxon. And then, guys, you have Next Era Energy and Chevron. Not your financial advice, not financial advice. Please do your own research. But, guys, we have a handful of corporations that own everything, and they're consolidating even more. That's why it's easy just to follow the money. And remember, the crypto teacher told you because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Meantime, let's talk China because some news out of China overnight. The central bank announcing a surprise interest rate cut. This is July economic data came in largely below expectations in the last half hour. Barclays cutting its forecast for China's 2023 GDP growth from 5.3% to 4.5%. And we're going to go to China, to Beijing right now, where we find Eunice Yoon, who joins us with more. Good morning.
Hey, Andrew. Well, as you said, China cut in a surprise move a key policy rate by the most since the start of the pandemic 3 years ago. So this was sending a big signal that the authorities are increasingly concerned about the state of the economy. The central bank had reduced the one-year medium-term lending facility rate by a bigger than expected or bigger than normal, I should say, 15 basis points. In addition to that, the bank also cut the 7-day reverse repo rate. This is a key rate that guides short-term liquidity for the banks. Now, the move came at the same time when the authorities here released a very downbeat data for July. Retail sales were up 2.5%, but compared to a year ago when most of us were locked up in our homes. So factory output missed. Fixed asset investment missed. The private investment contracted by 0.5 percentage point, and then real estate investment also tumbled, reflecting all the problems right now that we're seeing in the property sector, down by 8.5%. Urban unemployment also worsened, though kind of hung in there at 5.3%. But what was interesting about the unemployment figure was youth unemployment, because the Statistics Bureau said that China no longer, as of August, will report the youth unemployment number. And what's interesting, of course, there is that youth unemployment has been at a record high. In June, it hit 21.3%. So that's 1 in 5 young people here weren't able to find a job. So the fact that they decide to suspend the numbers, reporting the numbers, isn't really raising confidence in the economy right now and in these authorities.
Fox members of Congress becoming increasingly concerned about AI-generated images and videos It gets tougher by the day to determine whether they're real or fake. Emily Wilkins joins us now with a CNBC exclusive, DC's deep dive into deep fakes. Good morning.
Good morning, Andrew. Well, the saying is, if it looks too good to be true, it probably is. But that's becoming an issue for some lawmakers who worry that AI images look so convincing they could pose a risk to democracy and national security. We have the exclusive this morning on a new AI working group comprised of lawmakers from the New Democrat Coalition. They're a centrist group of lawmakers that tend to drive policy within their party. Congressman Derek Kilmer is heading up the group and said one of the top priorities will be that deep dive into deep fakes and how they could erode confidence in democracy.
The promulgation of deepfake technology, for example, poses a concerning threat, particularly when we're talking about things like democracy and the capacity to have major political leaders saying things in digital content that they have never said.
AI has already been used in several campaign ads this year. In one ad, the Republican National Committee used AI to imagine a hypothetical catastrophes during a second term for Biden, with fabricated images of Taipei being bombed by China and a run on the banks. While the ad was transparent in its use of technology, lawmakers have introduced bills requiring any AI use in ads to be fully disclosed. The new working group will also focus on other AI issues, including building a safety net for workers who could lose their jobs to advancing technology and how to harness the opportunities that AI can bring. Andrew?
Hey, Joe, you say rich investors, you think Berkshire Hathaway, that firm revealing a few new stocks in the home building sector. The firm disclosing that it owns a stake in D.R. Horton worth about $726 million at the end of the second quarter. It also showed smaller positions in NVR worth $71 million and Lennar worth $17 million. Likely a pick, though, by one of Warren Buffett's other managers. In total, the home builder exposure is less than $1 billion, a small fraction, of course, of Berkshire Hathaway's $350 billion in equity investments. Shares of D.R. Horton, NVR, and Lennar moved higher when Berkshire Hathaway revealed its 13F yesterday after the bell, still moving higher today. These filings showcase managers' long equity positions, and they're backdated to June 30th.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Crypto Teacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, BitChute, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.